All right. Good afternoon, traders. Happy Tuesday. Boy, this is the third time for some of you. We had a trading room this morning, a trading room this afternoon, and now we get to end with this lovely active investor workshop series. Putting the fun in fundamentals. That's a heavy task. That's a heavy task for me. So we will see what that looks like, and what we want to do with it. So welcome out everybody to the Tradespoon live trading room active investor workshop series. This is our every other week educational kind of a discussion forum. We'll look at technical analysis, different things outside of the Tradespoon model. We'll look at strategies, option strategies today, fundamentals. So essentially what we want to talk about is, for those of you who may not be all that comfortable with what exactly do we mean when we say fundamentals, where can we find them? How can we incorporate them without encumbering ourselves with too much information that is really not going to help make decisions? So full disclosure, I don't use fundamental analysis that much. A lot of traders don't, right? When you think about the decisions you make and what trades you want to make or not make, typically as traders, we are looking at momentum, which means we're looking at technical analysis, not fundamental analysis. The model is technical analysis. Momentum, price, and volume as representative of supply and demand. So what are fundamentals then? Fundamentals are underlying characteristics of what would be determined to be the strength of a company based on numbers, sales numbers, growth, sales growth, earnings growth, valuation ratios. The most famous one is price to earnings. You have book value, you have debt ratios. Does the company have debt? So essentially, it's looking at the numbers that the institutions might look at to understand, is this company attractive from the strength of the company itself? Now, my warning to you is this: fundamentals change by group, right? The debt ratio that one group has is very different than the debt ratio another group has. The book value, the cash flow, the sales growth or earnings growth. Oftentimes we want to understand it relative to the group. So what I'm going to show you is a quick and easy way to see what the fundamentals are, then be able to process those fundamentals and understand how do they compare to the rest of the group, so that you might actually find a different stock within a group. Now, here's the thing that I'll tell you. We used to have more information. We used to have some fundamental reports, but they just weren't being downloaded. We offered them and they weren't being downloaded. So we were paying to provide that data, and most people weren't using it. So we're just trying to find a way to help you understand how you can integrate this into your trading without fundamentally changing everything that you're doing. Somebody said Thomas said I went silent. Are you guys hearing me right now? Phil says, I can see and hear you. Sam said, hello. Hello, Sam. Are you guys hearing me right now? Because the volume bars are going up and down. It says that my microphone is being read, but let me know if you can still hear me. Yes. Yes. Okay. Sorry, I can't really tell the person who can't hear me that they can't hear me. So hopefully they figured out clearly. Great. Thank you, Walter. Appreciate it. For those of you who don't know me, my name is Scott Beck. I am the head trading coach here at Tradespoon. I have been trading for over 20 years. I have been teaching for going on 18 of those years. I do need to remind you, I'm going to go through the entire disclosure, but I do need to remind you that trading options in particular can involve substantial risk, may not be suitable for all investors. Please read characteristics and risk of standardized options prior to investing in them. Evaluate any strategy prior to use to understand risk and suitability. You must be aware of the risks, be willing to accept them in order to trade in these markets. Tradespoon and myself are not investment advisors, not registered with the SEC or FINRA. It should not be assumed that future trade picks will be profitable or will equal past performance. The information in this presentation is provided solely for general education and information purposes. Any strategies discussed, including examples using actual securities and price data, are strictly for illustrative and educational purposes. In order to simplify the math, commissions, fees, margin, interest, and taxes have not been included in the examples used in the presentation. Those costs will impact the outcome of your results and should be considered. Lastly, I and/or the team of Tradespoon may have a financial interest in the securities presented and the trade picks. Vlad Karpel, Tradespoon founder, is also an investor and a consultant of AOS Inc., which does business as Trading Block and Money Block, a FINRA and SIPC member broker-dealer firm. Tradespoon and AOS are not affiliated companies, and each firm's material is not endorsed by the other. No headshot picture. Now, I used to have that. I can't find those slides anymore. I guess I could find my old headshot and put it on there, but nah, you just have to go off the sound of my voice, unfortunately. Okay, so like I said, within the platform, we used to have more resources available, but as we have found that they were not being used, the bulk of what we're providing you is technical. You have some trade picks. We actually went through and did a full site tour. Let me show you real quickly here. If you go to event recordings and you go to the active investor workshop, and you go back to here, the Tradespoon site tour. That was a few weeks ago. I go through pretty much all the different aspects of the site. A lot of people who attended were quite pleased because it just sort of reminded them of what information is where, what's being provided, what can you do with it. But if you go back and watch that, you'll notice we don't have those fundamental reports anymore. So where can we go to find that information? Basically anywhere. You can go into Yahoo Finance and you can find it. You can go into Bloomberg. You can go into CNBC, any of those broad business sites. Somebody give me a symbol that we're going to use as an example today. Whoever gives me their symbol first, that's going to be our example for today's presentation. Give me a stock that we're going to use to talk about fundamental data on that stock. And I'm going to go through and show you a few ways that you can assess quickly, that's the key word, quickly, what the underlying fundamental data is. Microsoft it is. So I could go here on Yahoo Finance into Microsoft. And if you come down here, you'll notice you have some ratios already. You have the earnings per share, trailing 12 months, PE ratio, the beta. If you come into statistics, trailing PE, forward PE, PEG ratio. Now, we're going to talk about these a little bit because you can find the same numbers at a lot of different places. The one I'm going to show you, I like a little bit better. price to sales, price to book. We can come in here and you can see, how much float is there, how much is held by insiders, by institutions, what the short ratios are. I can look at profits and growth rates. What I can do and what I should do, very different things. So like I said, you could go to any stock site, put a symbol in, and you could start to find some of this information. You can see financials is going to be a part of it. This is going to be more of your cash flow statement. You can see, what is your earnings per share, operating income, EBITDA, earnings before interest, taxes, depreciation, amortization. But unless you want to, so when I first started in the industry, this is back 99, 2000, 99 actually. And of course, you start hearing of major names, and of course Buffett came up, and so I said, okay, I want to learn to invest like Buffett. So I looked up if he's written any books. He hasn't. He has letters to his shareholders, which is an interesting compilation of his annual letters. If you've never looked at that, that's an interesting one and actually quite informative. But he says, oh, I learned from Benjamin Graham, right? Old school. There was a couple of books by Benjamin Graham. Security Analysis Explained, I believe, is the first one, which is just this enormous, enormous book. Oh, how do you read a balance sheet, profit loss statement, right? The numbers. Then he wrote The Intelligent Investor, and I started reading them, and I just was like, oh, this is not for me. This is not for me. What I have realized about fundamental analysis is if I'm going to do it, I want it to be fast and easy, right? Fast and easy. And may as well throw cheap in there. I don't want to have to pay a lot for this information because, again, it's really not going to have a huge impact in my trading. In fact, a quick way to assess, think about your time frames. The fundamentals change. Price action changes daily. The charts change daily. Support, resistance, trend, right? All of the aspects of charts and momentum are changing constantly, daily. Whereas fundamental analysis really only changes once a quarter. The analysts will sit and try to speculate on what they think those changes may be. And as they put their reports out, they can certainly have an impact on stock prices, right? If they lower guidance or raise guidance, they can certainly have an impact. But that's the first thing to think about is how often does this information even change? Once a quarter. When? When they announce earnings. They announce their earnings. They announce their guidance. What was our earnings per share? Now we have a new one. What do we think it's going to be for the next year? Now we have some expectations. They give us all of this data once a quarter, and they give it to us, and then we as traders start processing it. So we tend to see the market react to it very quickly, right? The premise of a market technician is anything that can affect the price of a stock already has, right? The premise of a technician is the market discounts everything. So as information comes out, the market is discounting that and absorbing it into the price. We have a new variant. Oh, the market starts selling off. We think that the a stimulus package or a infrastructure package may be passed. So what happens? The market starts to integrate that into the price action. The site that I like to use that I'm going to show you is FinViz. Now this is a good one. It has a good heat map. You'll see me use this in the trading rooms. This is the FinViz trading map. It just has some quick pictures. You can see utilities gave it up today. Healthcare, a little bit. Why can't I close you? Healthcare, not doing great. Everything else was quite bullish today. We're looking to see now for me, when I think about fundamental analysis, I do want to mention two dimensions. So the first aspect of fundamental analysis is the economic fundamentals. Not, I don't start from a micro, I start from a macro. From a macro standpoint, what are we thinking about? We're thinking about jobs in the labor market. We're thinking about GDP. We have numbers coming out. Consumer sentiment. We're thinking about interest rates and monetary policy. That is all fundamental to the overall market. So from day to day, you're going to watch us when we're going to talk about what are the numbers, what are the expectations, are they coming in as expected, or are they coming in better or worse? But overall, that provides context for us through which we process the market. And what we're trying to do from a macro standpoint is the same thing we're trying to do from a micro standpoint. I'm trying to connect the dots between fundamentals, good jobs, the strength of the labor market, the Fed, interest rates, all the things that we know, inflation. Obviously, inflation is a huge one right now as a fundamental underlying principle within the context of markets. And as those numbers improve or worsen, then we see the market price it in, and we watch the momentum to see, oh, okay, here's how the market sees it. We're trying to do the same thing with individual company analysis, right? We're trying to say, what are the fundamentals of a company? So I'm going to go ahead and I'm going to bring up Microsoft, and you're going to see why I like this. So if I go into Microsoft here, it gives me that connection. I don't use these charts, right? If you watch me trade, I'm going to use Tradespoon charts to help with predictions. I'm going to use my standard. Let's bring these up. Microsoft. Ask questions as they come up. This is always an interesting topic for me. I'm just, admittedly, not a huge fundamental guy. That's not to say that there's no value to it. It's just not something that I spend a lot of time doing. I mean, maybe you guys have heard something from Vlad, but I don't think Vlad is huge in fundamentals. We're both more technical traders, but we do know that we have some subscribers who are more long-term. The longer term you are, the more fundamentals become important. If I'm only trading for 5 to 9 days and there's not an earnings report coming up, those fundamentals really mean nothing to me. Right? Absolutely nothing to me. If I am planning on being in a trade a little bit longer term, the longer the expectation, the more likely that you might hold through earnings, and the more important those fundamental numbers become. So here is Microsoft. I can see the chart. Now, as I scroll down, what am I interested in? I'm definitely going to be interested in this information here. This is fundamental information. What sector is it in? Technology. What industry group is it in? Software infrastructure. I don't really care that much about the country. Mostly just that information there. Then I have a nice quick synopsis. Okay. So I'm gonna talk about the numbers that I would have a tendency to look at if and when I were to look at fundamental analysis. So the PEG ratio to me is more important than either the PE or the forward PE. The PEG ratio is the price to earnings, but also factoring in growth. Price to earnings to growth. PEG ratio, right? Debt to equity is an easy one. Do they carry a lot of debt? obviously sales growth and earnings growth. What sales growth have we had? What earnings per share growth have we had? What earnings per share growth are we expecting to have? Now that's 5 years, and we also have over the next year. So we have the projections for those numbers. Return on equity, ROE, which tends to be a look into management's effectiveness. How well do they do with management effectiveness? I sometimes will take a look at the short, right? How many shares do we have? And what percentage of them are being shorted at any given time? And I will also look at the beta ratio, beta being how volatile is it? Some people like to look at cash per share. We know Apple's got a ton of cash per share. If you're investing, not trading, you might look at the dividend. This is all your fundamental data. Now, if you look down here, this is fundamental assessments. These are from the analysts. This is what I don't like. This is overrate, outperform, buy, outperform, overweight, buy, outperform. So overall, for the most part, they're coming in pretty good. These give you an idea of their target ranges. You can see it's anywhere between 340 upwards of 400. I believe, didn't we talk about 400? I thought we did as a, oh, something's off here. I don't know what I did there. No, it definitely wasn't 400. No, we didn't. We did Apple and Marvell. Okay, that's my bad. I, for some reason, thought we were doing Microsoft, but we did not. Okay. Okay. Now, why do I like this? So this gives you a quick read. If it's red, it's a little high. If it's green, it's pretty good. If it's black, it's somewhere in the middle. But what do I want to do? I want to come here and click on this software infrastructure so I get the entire group. Now there's 131 stocks in this group. That's too many for me to process. Like I said, this has to be fast and easy. That's not fast unless I do what? Well, I'm going to trade options. So I'm going to say over 2 million shares. Now 130 goes to 36. I'm not going to trade low price stocks. So I'm going to say give me anything over 10. 36 goes to 29. I'm looking to go bullishly because that's more of what I've been. So I'm looking for bullish stocks. I want it above its 200-day and I want it above its 50-day. And I'm down to 4. You know what? Now that I only have 4, I'm gonna be a little less strict and I'm gonna give it just above the 200. And now I have the ability to look at the financial, the valuation information. So if I want to look at the PEG ratios, I can see who's lower than Microsoft, Green Sky, and whoever this NLOK is. But I really don't have a lot of information. Oracle is another one that's in here. But you can see this group has been a little bit struggling. If I want to see who's got the best earnings per share projected over the next 5 years, it's actually ZS, Zscaler. So I can see that fundamental information. I can go to the financial data. I can see who has the best return on equity. Microsoft's pretty good, but this box and this, I don't know these companies here. They don't have as good a volume, so they're not going to have as many options, but this is where I can come in. I can see what is the good number for debt to equity. You can see that relative to the other stocks, this green sky has a lot of debt, a lot of debt. So you're trying to be a little bit more careful with that. Um, and then I can go look at the charts to quickly see, do any of these stand out? This Cloudflare doesn't look great. It's dropped from 220 down to 120. Don't like the technicals. Don't like the technicals. Don't like the technicals. Which ones do I think have the best prospects? I would say Microsoft. The technicals still look pretty good and the fundamentals have been pretty strong. I would say Green Sky. The technicals have looked pretty good and the fundamentals have been pretty strong. If I were to say one or two more, I would say Oracle was, but really has gone through it, gapped up, kind of stabilized, gap back down, and is right where it started. So I don't love the technicals there. This Norton LifeLock, it needs to break its consolidation. So now what? Now what I know is that I'm looking at stocks that are both technically strong. I have I have price action that has been showing the buyers in control. It's been moving higher. The sellers have had the last few weeks to come in and they haven't done anything. What else do I have? These have the strongest fundamentals, right? As we look through the fundamental data, and that's what I'm interested in. I don't want to look at it and be like, oh, it's got a 1.3 PEG ratio. So what? What does that mean? I don't know what that means unless I have the ability to reference that to its competitors. Doesn't mean anything to me. So if you're going to integrate fundamental analysis into your routine, make sure you have the ability. Make sure you have the ability to give it some relative understanding. Is it stronger or weaker than the rest of the group? Someone give me another stock. I wanna do another one. Give me something. Oh well, let's. You know what? We liked Costco today. I'm gonna pull up Costco. So I can quickly come in here and I can see I like the technicals. At the end of the day, if I love the fundamentals, but the technical analysis is weak, I'm not gonna trade it. It's got to be both. It's got to have the fundamentals and the technicals. Okay. So that's one of the things that if you're going to integrate it, make sure it's got both. This has good technical analysis. It's got what for fundamentals. The PE is kind of high. So is the PEG ratio. But I don't necessarily know that's high until I compare it to other from its group. The debt to equity and long-term debt to equity is pretty low. Earnings per share this year, 25% growth. Next 5 years, we're around 10%. Past 5 years is 16. Past 5 years in sales is 10. So it looks like it's maintaining close to that. Return on equity, 29%, pretty strong. The beta ratio is a 0.64. It's less volatile. If you don't know what the beta ratio is, if you don't know what the beta ratio is, it's how volatile is it relative to the S&P 500. So now what would I do? I would say, well, this is a consumer defensive discount stores. So who does the market consider to be its competitors? There's actually only 10 of them here. We really don't need to do too much filtering. I could ask for over 1 million shares or over 2. If I ask for, you can see Big Lots. I didn't know Big Lots still exists. Only trades 700,000. Price Smart, 170,000. Tuesday Morning Corporation. There's not much there. If I ask for 2 million though, it's only Costco, Target, and Walmart. So I'm going to say give me over 1 million shares. That's going to narrow it down to 7 companies. And then I'm going to dive right in. Let's look at the charts. who is strong? Well, we know this one is not Ollie's Bargain Outlet Holdings, so not holding up, no good. Target, not holding up. Walmart, not holding up. Who's holding up? Dollar Tree, Dollar General, BJ's Wholesale Club, and Costco, right? So I now know these are the four that I'm more primarily interested in. Now I can very quickly come in and look at valuation measures. And I can say, of these, who's got the best peg? Dollar Tree has a low peg. We want it low, like price to earnings. The lower it is, the cheaper it is relative to the expected growth in its earnings. DG is not bad. Then BJ's and then Costco's kind of one of the worst as far as that goes. Just pure price to earnings ratio, it's one of the worst there as well. Okay, so why do people like it? Earnings per share growth, 25%. Others have more. So yeah, we're trying to figure out what. I mean, I love Costco, but I love it mostly from a technical standpoint. Return on equity, BJ's, Target, DG are all a little stronger, but Costco is definitely pretty strong. Now, what do we have? Debt. Well, BJ's carries a lot of debt relative to Target, Dollar General, Walmart. You can see that on that Ollie, Costco is the lowest when it comes to the debt that it carries. So at the end of the day, what's my objective when it comes to fundamentals? What's going to make fundamentals more fun when they're fast and easy, when you don't stress out over it, when you're not like, well, I don't know if that's good or not. If you don't know, come in here. Look at it relative to its competitors. You might think, I love this stock. And then all of a sudden you realize there's 3 stocks better, both fundamentally. And then again, for me, the ultimate decision is going to be technically. The problem here is Costco by far has the best technical chart, right? It's by far got the best technical chart. And so, as far as that goes, you have to decide, are you okay holding on to other things? I think BJ's does look good. Angelique liked it. It just made a new high. It's consolidated down. If it can hold this low in turn, the trend is intact. I don't like Target right now. I don't like Walmart right now. Dollar General's iffy. Dollar Tree, I think, is stronger. And I don't like Ollie. So now I have 3 stocks out of this group. And I want to make sure that they're fundamentally, there's nothing that makes, one of them stand out for weakness or vice versa. So what do you want to look to do? Understand a few things fundamentally. PEG is easy. Sales and earnings growth over the year and over 5 years, easy. Debt to equity, easy. Return on equity, easy. Looking at the shorts to see if it's starting to be something that the market is viewing negatively, easy. Looking at the beta ratio so you understand how much volatility it has, easy. These are the things that will help you to integrate fundamentals without structurally changing what you're already doing from a technical standpoint. I believe that technicals is where the decisions get made. Fundamentals for me is more of a screening criteria than a trading criteria. So as I'm screening, one of my objectives is to make sure that my watch list is chock full of the best stocks from the best groups of the best sectors. What sectors right now? Technology, of which software has done pretty well. Chips has done pretty well. Consumer discretionary has been a strong one. That's where we are here. Discount stores, there's a couple of others. But that's what I'm looking for, is how can I understand the fundamentals of this company relative to its group to help me make sure that I am keeping my eye, that I have on my watch list. We did a little bit of a watch list reconciliation this morning. How can I make sure that those things are in place quickly and easily? Um, uh, uh, you don't need to read. So I remember going through those analyst reports. If you've been with us for a while, you might remember 3 or 4 years back when we would go through the putting fund in fundamentals. We would actually read entire analyst reports. It just didn't help make decisions. If you are a technical trader and you're going to use fundamentals, what are you going to use it for? You're going to use it as a screen. How can I weed out, if I have 7 stocks in a group that I think all look pretty good, how do I ultimately decide the 2 or 3 that I'm going to have on my watch list? Well, I can quickly do a fundamental screening and say I want the lowest peg, highest growth rate, highest return on equity, and low debt. Because those are the factors that are going to make this stock continue to be attractive to institutions. So that's what I'm looking for. How do I find those? How do I integrate those? And then go from there. We have some extra time. Do you want to go through one more? Does anybody have any questions? There's no secret here, right? There is just, I have seen terrible companies with terrible fundamentals blast off and go through the roof. I have seen stocks with great fundamentals fall apart. Oftentimes it might be because of the guidance that the company offers, where they say, hey, we really did great with our earnings, but we're seeing slowdowns. And so now we're predicting that. Gold. Well, now gold, G-O-L-D, yeah, let's take a look. Gold is in basic materials. Obviously, gold used to be ABX, Barrick Gold. Barrick Gold is now GLD, or excuse me, GOLD. So if we look at gold, now overall, not a great trend. We're barely bouncing off the very bottoms of the chart. So not a great trend to start things off with, right? We go into the gold sector. $46 stocks. I put a glance over here. It looks like I can definitely look for high liquidity. So I'm going to say over 2 million. That's going to bring me down to 15 stocks. There's some cheapies in here that I'm just not really as interested in. So I'm going to go over 10. That's going to bring me down to 6 stocks. And that's it. Now I can look at these 6. I can start with the charts. I've already said, if you were in the trading rooms in either the morning or the afternoon, I've already said basic materials really is not doing much for me right now. And this is evidence of it. Look at it. Newmont Mining coming down, chopping around. AU coming down, chopping around. It's up a little. GFI chopping around. BSW really, really poor. I don't know what that is. Looks like it's ads. I don't want these ads. Leave me alone. There is not one of these right now that fundamentally has what I'm looking for. If there was anything that was close, it would be AU and GFI. But we can still come in here. We can go to our valuations and we can quickly say, where's the best PEs? AU, GFI. Where's the best PEGs? AU. GFI doesn't have one. It doesn't probably have enough growth. Earnings per share over the last 5 years. AU. GFI is a little bit, that's why it doesn't have a PEG ratio, because it doesn't have a 5-year estimate. We can look at the financials, return on equity, who's strong, SBSW, don't love the trend. There's GFI and AAU. So for me, if I was going to pick two stocks out of the gold sector, I would say GFI and AU have the best combination of technical analysis and strong fundamentals that would continue to provide it. Now, if I saw that there was one stock that was fundamentally stronger than the rest of the group, I would probably put that on my watch list as well to see if the fundamentals happen to catch up. Excuse me, if the technicals catch up. So if it breaks out of its consolidation and it already has established fundamentals, that would be something that I would be looking at and interested in as well. And that's it. Keep it simple. Find a source. If you don't like this one, find one that has the ability to quickly and easily assess the fundamentals of that company relative to the group. Otherwise, you're going to be like, what's a good PE? What's good debt? What's good growth? We don't know until we see it relative to its peers. And then, even if it's outperforming its peers, if the technicals don't match up, be patient, watch it and see if they eventually catch up. Or what I like to do, as I said, is find a combination of strong technical analysis in addition to strong fundamental analysis, because you can see we can do it in minutes. We can integrate it and put it in as part of what we do and say, hey, you know what? This is going to help me when I have 50 stocks in a group and I'm down to 15. How do I get 15 down to 3 to 5? Fundamentals gives us a nice, easy way to do it. So how do I put the fun back in fundamentals? Make it fast, make it easy. And make it something that will help us to make decisions. What's the decision? It's not if we trade it or when we trade it. It's whether or not it has met our criteria to be given a spot on our watch list. You should see those spots on your watch list as very precious, very valuable. We don't just throw stock after stock after stock on our watch list. It makes the more you have that you're actually not going to trade, the harder it is for you to maintain, manage, and curate your watch list. So allow fundamentals to bring that extra dimension that allows you to assess, quantify, and make a decision quickly to say, okay, these three stocks have the best combination of technical strength in addition to fundamental strength. Those are the three representatives that I want to watch from that group. I will go through all the groups of a sector, right? The entire sector. I will go through every group one at a time in order to find the best two or three, because really at any given time, there's only two or three leading sectors. So I'll go through all the financials. I'll go, not financials right now. Let's say technology right now. We'll say consumer stocks right now. Those are two of the primary. A couple of secondary sectors that I might go through would be healthcare and industrials that are starting to show a little bit of strength. And then what you're trying to do is maintain a best in breed mentality. Okay. Questions? I actually thought we would have wrapped up a little earlier, but this was good to be able to go through. You can start from the group, the sector, then work your way to the group, then find the stocks. Or like we did here, we started with a stock where we said, hey, you know what? Someone told me about stock XYZ. Well, put it in, run it, scrub to see, is this the best stock? Well, I don't know. Let's see. So if someone just said, hey, what do you think about Abbott Labs? Well, the stock is pretty strong from a technical standpoint. Then I can quickly come in and realize it's healthcare medical devices. There's 140 in medical devices. Not a lot of them with a million or more, so I would probably use a million as my first filter. That brings me down to 29. Maybe I would actually go ahead and say average volume over 2 million. That puts me at 17. right? That's still, now I want to find only those stocks that are bullish. So I'm going to say, give me everything over 200-day moving average. Now I'm down to 4. Here's the charts. What do I like? I like Abbott. I like EW. And that's about it. The rest of them don't have good enough charts right now for us to even pay attention to. Scanning, sorting, watch list development, fundamental analysis, these are all auxiliary routines. So make sure you do it quickly and easily. All of that is going to be used to make sure that the stocks belong on our watch list. If there's any that are questionable, go scrub them, go figure out if there's something from that group that's better and start watching that. But make sure you feel confident about finding the best of any given group at any given time. I'm glad you guys liked it. Thank you for the positive comments. I'm going to let everybody go. See what you have. Phil says, go get some rest. Yeah, it was a long one, man. I wasn't expecting to do 3 webinars, but Vlad asked if I could fill in, and since he did for me, I had no problem reciprocating. Plus, I never mind meeting with you fine people. I will see you in 2 weeks. If you only come to the active investors, no problem. Come back in 2 weeks. Those of you in the trading rooms, we've got some things, we've got some work to do. We've got some stocks on our radar. So come tomorrow. Let's see if those develop, especially out of the consumer sector. So I will see you then. I appreciate you guys choosing to come spend some time with me this afternoon. And as always, happy trading.